Good morning, everybody. It's Monday morning, the 25th of November, and what a weekend it's been. The markets have crumbled. And so I wanted to give a bit of clarity, some control, and some conscious thought as to what to do with your portfolio and where other options in the space are evolving, and I think everybody will find it very interesting. So, firstly, before I get started, this is a video from Platinum Crypto Academy, guys. You know that we've been educating, mentoring, and working with in the crypto space now for almost 4 years, working with retail traders to help them better themselves in the crypto space with guidance from our professional traders and mentors. One of the great things that we offer is a free trading magazine each week called Cryptonair Weekly. We've just released our 107th edition last week, and I implore you guys, log on to Platinum Crypto Academy, sign up for free, get your free copy. It's got what trades we're looking at, what projects we're looking at, all the important market news for that week that's impacted the market, and where we believe the market is going, more importantly. So a little bit of a plug there, guys. So jump on board, have a look, and subscribe to Cryptonair Weekly. It's free. So what we're going to get into today, like I said, obviously the markets have taken a bit of a tumble. I think I checked coin market cap, 189 billion. I think that's the lowest I've seen the major cap value of the industry for quite some time. Quite a, no, I wouldn't say a huge concern. This is typical crypto world, but I'd love to see that in the 250 to 300 range, obviously, for everybody's portfolio wealth. I'm checking over to Mazzari, and same things occurring. We're on a under 6,000, under $7,000. Great buying levels. It could go down to six, looking at the technical analysis, but there's strong levels at 663, I think it is 6,300. So have a look out, and if you dollar cost averaging in, it doesn't matter. Just take the buys, stack your sats, and make sure you're not listening to the day-to-day noise that's going on in the market. But for those of you that are listening to the noise, I'm going to get into a couple of the news articles shortly. But firstly, I want to talk about a topic which I think is going to be the next wave of cryptocurrencies, which is decentralized finance. Now, I've talked about this several times in terms of individual projects that are offering something in that space. But what I wanted to do is just give a bit of a rundown and a bit of a video on exactly what that is and how it works. And so you know that decentralized, or you may not know, but the whole purpose of cryptocurrencies as a currency is that you're in charge, you're holding your wallets, they're not being taken care about by anybody else. And decentralized finance is in a bit of a contrast to that, to be honest. The discussion at the moment is at the epicenter of the crypto market, decentralized finance, how you earn interest on your Bitcoin. But before telling you exactly how you do that, I want you to know that most cryptocurrencies like Bitcoin or self sovereign money, you look after it yourself, like I've just said, meaning they're not held and taken care of by a hedge fund or anywhere else or a bank that's storing your wealth. That's why, to be honest, handing over your Bitcoin to a lending platform or an interest account is a little bit counterintuitive, but there is some real value in it. And I've looked into it, and there is some real value. Many crypto investors, and I have to say this before I get into this, keep their Bitcoin, as I do, and other cryptocurrencies in deep cold storage, which is the main way that it's been designed to hold. So your Trezor, your Nano S, etc., offline, where there are some more frivolous individuals in the space that keep them on exchanges, which, to be honest, prone to hacks. You not haven't got access to them. If the site shuts down, what happens? You lose it. I know that's counterintuitive to what today's discussion is, but I wanted to make you aware of that from a responsibility perspective. But in case you're just holding cryptocurrencies in a wallet that doesn't increase your wealth, accept price appreciation of the underlying asset. So many of us hold Bitcoin, Ethereum, etc., and we hold it because it's going to go up in value on the speculation point of view. For example, it doesn't go up in value in terms of Bitcoin. If you own one Bitcoin, which you bought for however many $1,000, it may be worth 7,000 now if you bought it at 2,000. So the value against USD has gone up, but your holding still remains the same. It doesn't go up in value. It doesn't go up in BTC value. You're speculating on the price against the US dollar, the euro, the pound, where you're going to get your returns from. But this lending and borrowing market, it's really looking at this space, and I think it's very interesting. But there are specifically designed crypto lending and borrowing services that take care of the complex process at a minimal risk. And that's the important thing, a minimal risk. So I wanted to get into these services. Now, there are a lot of services out there. Quite a lot of them I didn't think were worth any mention today in today's video, but for the sake of going into it, I'm going to just list maybe 5 or so sites which I felt that were quite interesting, and based on my research, and again I always implore people to do their own research, they look as great value to actually return some percentage against your holdings. So the easiest way generally to get started earning interest on your BTC or cryptocurrencies is by opening a crypto/Bitcoin savings account with popular lending services. Many lenders out there are mushrooming across the globe. They're basically sprouting up everywhere. But according to me, like I said, not all of them are established, etc. yet. And the only ones which I'm paying attention to are a couple here. So the first one I mentioned is uHodler. Great little website. It clearly demonstrates what you get from interest value. So if you're holding a stable coin on their site, the APR is going to be 12%. 12%, guys. Absolutely incredible. At a bank, you're not going to be holding any. So if you're holding a stable coin, I don't know, True USD, Tether, whatever it may be, and if you're just popping that in a savings account with uHodler, 12%. Let that settle for a second. There isn't, I don't think there's anything larger than that in the market that I can find. But 12% on holding a stable coin, they're going to pay out in your in your currency, so you're growing your holdings. It's just absolutely incredible. Now, opening a crypto and lending savings account with them, or any of these, I've seen in ranges from 4 to 12%, like I've said. So how does the Bitcoin, I wanted to find out, how does this work essentially? How are they able to give you 12%? Well, it's all to do with leverage, guys. We all know there's a lot of leverage going on in the market at the moment, and traders are wanting more money to trade with. This money doesn't appear out of nowhere. So earning interest on Bitcoin and altcoins wasn't possible a few years back because there was not enough liquidity in the market and recognition from investors around the world. In 2019, and crypto, I think this is the right phrase, crypto collateralized lending markets, it's possible now that people obviously need more bang for their buck when they're trading. Well, it's not obvious, but some people choose to have that as the case. And so it's not a new concept. It's been going on for, as long as I suppose the financial markets have been in existence. The wealthy people in the space or in the traditional spaces, millionaires, billionaires, have been using this age-old method of making money work for them. And you might always say that you need money to make money. Well, this is a typical case of this. Basically, what happens is, in traditional world, investors, borrowers, usually bonds, stocks, or anything like that, they will do with. Let me rephrase. Sorry. In the traditional world of investors, borrowers, usually like housing, stocks, or bonds to issue or get loan, you get loans against these things. And accordingly, do more with their capital. And how do they do this? Well, in the same way that banks operate, lending platforms and services take your deposits, so they'll take your one BTC and they'll lend it to um, vetted borrowers at a really high interest rate between 10 and 16% generally, from what I've been seeing. They will then give you return on that investment or that interest rate, maybe 4 to, like I said, 12%. And so the company will take the difference in value between the percentage that they've loaned out to the vetted borrowers, and you will get the return you'll get the return from holding on the platform. Really quite clever. And this is definitely one way that you can earn a passive interest. So I'm going to just go through a couple of the um, applications. So there's BlockFi. I've mentioned this one before. Using it myself really seems to be very apt at what it does. I've got no problems with them. Basically, you're looking at 6.2% or no 8.6% now on your crypto. Great. You've got Celsius, I think it is. I think yeah, Celsius network. Borrow and pay on the blockchain. Love this little image here. Happy Monday. This week you've earned Bosch. Excellent. Again, same process, same business model, just a different company, and they're offering different percentage returns on different coins that they have available. I think it's really, I think they're saying 3.9%, and they're doing they're doing quite a large array of assets compared to some of the other platforms. So again, pick what you're holding at the moment. And with the market diminishing in value at the moment, you could still be getting percentage returns from some percentage of your portfolio if they're holding on these sorts of sites. You've got Nexo. This one looks really solid. 8% I've seen here. Let's have a look. Oh, they changed it. Enjoy lowest credit. Oh, yeah, that's the credit itself. So obviously you can borrow from those guys as well, or most of these companies. But the lending companies are where it's lending is what you want to get your interest on. So let me just see if they've got it on here. I did research it previously, and it was something like 8%. They do DAI, Paxo, USDC, US Tether, and True USD, and Trustpilot, nice accredited reviews there as well. So yeah, look, earn interest. Let's have a look on stable coins. Let's just click into that for a second. And so I wanted to just give an alternative to what's going on in just hodling. Now, again, I mentioned that it's almost a little bit counterintuitive to the digital crypto space. But look, guys, if you're holding it in your cold wallet already, or if you've got money in a bank, a fiat bank, which is only giving you point something, why not get in the realms of 12%, 8%, 7% on your money? It's just sitting there. You might as well convert to a true USD or something and just hold it here instead. Earn interest, generate wealth a sensible way. And those are the options there which I've gone through. So depending on the platform you choose for a savings account, the types of crypto you're depositing will depend on where you go. I've only just opened the door, guys, to these sorts of areas. I just think you need to explore it yourselves, find out, but there's loads of services out there offering them. And you may disagree with the ones that I've found, but uHodler providing 12% is the highest in the industry I've found. And can you argue with 12%? Anyway, back to the news. What I really, really like this week is I've seen over the weekend on Twitter, I've seen it obviously reportedly here, Binance reporting will sue the Block crypto media publication of a full story. I cannot back this up enough. And if anybody can give CZ a like or a retweet, do it, because it just shows that there is credibility in the space, and these news outlets touting fake news, swinging the market, and besmudging potential reputations of companies at a whim without no recompense is atrocious. And CZ apparently is going to sue them. Good on him. Good on him. I think the next bit of news I saw that 25,000 blockchain firms in China tried to issue cryptos, senior official claims. Now, I know China have recently changed their stance again. Well, clarified their recent blockchain, Bitcoin differentiation, and any ICOs they're not interested in mining still available, able to hold cryptos in the space. I think it's really, really cool that they came out with a real positive statement a couple of weeks ago now, but now they're looking at cracking down on the bad side of the space. ICOs have been ripping people off. Really good. I've made a video last week on China and my worries, so I'm not going to get into that, but just a bit of an updated story from China. Backed, I'm a little bit, don't know where these guys are going. They came out as being the future contract based on Bitcoin company pioneer making waves in the space to now going down a more cash settled route, which a little bit disappointing, guys. But I suppose they've got to make their money, haven't they? Somewhere. The Clearly they're not turning over the amount of Bitcoin they wanted to, and so they're looking. I know they're coming out with their option and the options in Bitcoin, the futures that are cash settled rather than Bitcoin settled. Bit disappointed with them, to be honest, but they don't care about my view. It's just the overall market. But anyway, that's the news for today. Hope the decentralized finance option gives you a little bit of food for thought. Have a great week out there and keep looking into stacking those sats, guys. Speak soon.